Okay, so today we are here to celebrate. No, just kidding. We are here, guys, for webinar number 1 of the crystal ball. That's not going to be a long course or anything like that, because when I was developing that, I was relying on tools that I use for myself on every single day. That's statistics and predictions. Basically, everything but not technical. Okay, I was looking here for a system to combine everything that relied on statistics, pure statistics, when things happen behind the scenes, and apply the technical idea on it. So whatever we got here is basically designed to be as simple as possible. Of course, there are still improvements to do. Of course, there are still manual things to do. It's not just everything like boom, boom, set and forget. You know, I'm not a big believer on a 100% automation. So today we are here basically to explain how is the best to work with these tools and why. Okay, and that's what we have here. As I said, it's not going to be very, very long course because Crystal Ball designed to be simple. It's not something we need to start to learn all the theory of gun, for example, for it. Okay, so in today's meeting, we will discuss about what is the crystal ball, what it's based on, and actually why. Okay, we will discuss about all the steps, how it's best to trade it, and following that would be, of course, when it's best not to trade it. Because with all the wish in the world, sometimes it's just best not to trade. And I will explain here the idea of the risk reward. This system is all about the risk reward. That's not any of the scammy system you will find on the internet claiming for 100% success rate or anything like that. No, not at all. This system is purely on statistics, which means you can have an amazing run of 5 or 6 or 7 or 10 winners. You can have 3, 4, 5, 6 losers. But if you keep the risk reward, as we will talk here, this will lead you correctly. Okay, and saying that, I will start with it. Do not expect every single week to end up with 10% or 20% profit. That's not gonna happen. I'm sorry if I exploded the bubble, but with the basic of the steps, respecting the risk reward, you will see good growth in a long run. That means one week could be -% or -2, the next week +2 or +5. Maybe 1 month would end up like a break even, and maybe 1 month would end up like 15% growth. It's all, of course, acceptable and all, of course, correct. And I start with that because I know how how nature is designed. We always are looking for the best performing system, like 100% successful rate. That does not exist, and that's what I wanted to start with. I keep receiving these kind of questions like, Vlad, why did I have a loss? Really? Seriously, you ask me that? And what does it mean? This system shouldn't lose, right? No. Who said that? Who said that? Never. You will never hear me saying that, ever. Nowhere. So that's what I basically wanted to do here. It took a bit longer because I wanted to do these webinars earlier, but I had some technical issues that I had to solve with the program of which we use right now. So the format of the video and everything will work fine for you. And here we are. Okay, so after this introduction, let's begin, guys. Welcome to the crystal ball. The name was not chosen by me, but by my team. I like it, to be honest, because basically the idea of crystal ball is to give us the combination of two statistical tools. One of them is a statistical tool that is analyzing days separately and checking historically on what day or day combination we had bullish or bearish run. And I'm talking about the crystal ball predictor, which you can find here on the left side. Okay, this is scanning statistically, historically on every specific pair the chances to have on that very day or a run of few days, like in here, 1 day, 2 days, or 3 days in a row. What are the chances to get this bullish or bearish run, and give it that statistically proven by percentages. And the second tool is the statistics, the one that I love so much. Why? Because this indicator, what it does, it's scanning historically for tops or bottoms where from we got reversals. Why it's great for us? For two reasons. To know when there is going to be potential top or bottom, so we can know where we will look to cash out if we are long or if we are short, or alternatively where we are going to look for to switch from longs to shorts. Okay, and the combination between these two give us a very good setups. Of course, not 100% successful, but it gives us what I love to find first of all, and that's the best starting point. Okay, you know, like every single journey, like if you imagine if you are driving a car, if you start from a flat place, right, when your car is warmed up, then your drive would be floating, right? It would be good. But if you start on a mountain and you need to, after it was like very cold, and you have to press the gas pedal and you have to go up on the mountain, there is a very good chance the car will lead you to some not successful moments. So the starting point is very, very, very important, every journey, and same here. And these two tools give us basically the best starting point, where from we can only get better and look for the best possible setup. Again, that's not a guarantee for 100% success of all the trades, but it is a guarantee that you are on the best starting point. Okay, and that's what I call listen to the market, timing. Okay, listen to the market when there are very high chances for the direction to happen. So a quick explanation about the predictor I already explained. Quick explanation about the statistics. Most of you guys already know how to work with that. You watch my videos. Some of you are also the forex Libra code users, and you basically you got these tools. It's not new tools. The only difference is that for the Libra code we were using for these numbers we were using as confirmation, while here the system is based on this combination and we apply levels on it. That's the only different approach here. Most of you know how to use it, but still for those who don't, I do want to explain quickly what the statistical indicator is. Thank you for that, Peter. I'll be very honest. You know me for a while. I always look to improve the things I have. Many ideas I receive from you guys, from my followers. Many ideas I receive from my students. I cannot always think about all, and whoever deserves the credit get the credit, of course. And that's all. So I'm always looking to simplify the trading, also for myself, and of course for the followers of mine, because the simpler it is, the easier the decision we have to take, and that's all. It's looking to get better always. So thank you for that, Peter. So this idea of the oh, sorry, I missed the question. Updates of the software? No. There were no updates by far. There are a few things we are testing, if speaking honestly. If they prove to be successful and helpful, of course we will apply that. Anyway, guys, those of you who get the copy, that's for lifetime. There is not going to be extra conditions for new copies. That's always a rule of mine. You get my tools, you get all the updates. I'm not going to ask for anything of the updates. So if these things I am testing, or if you have any ideas also for improving, guys, share with me. We will test that. When I say we, I mean myself and my team. And whatever is proven to be successful and helpful, of course, going to be included in the code and would be shared with everyone. So as I said, my goal is just to get better, everything. It's for myself and of course for you guys. So back to the statistics. These statistics again examines historically tops and bottoms. How it is designed? Well, we have the days, right? These days are the days of the month. First, second, third, fourth, and so on. Now we have the arrows for sell and for buy. Okay. Now if you arrange that, you would see we designed it by colors. Okay. That would be like days for buys, the best days to look for buys, and that would be the best days to look for sells. As potential top or bottom. So if we are designing, let's say, if we are organizing, filtering by cells, it will give us the best days to look for possible sell. In other words, to look for a top to be created and a sell to take place. Not just if I write down, it will not help me anyhow because the statistical indicator is checking for tops and bottoms. So that gives me on what specific day there is a great chance I will get a top if I design it by tops, I mean to look for sells, or if I design it by bottoms to look for buys, it will give me the best days for bottoms. So once I get the top days, what's the numbers I can see inside? You can see here how many times it appeared in history, and also the percentage for it. Okay. Now, if you see small numbers, that means your history is low. Okay. If you see small numbers, it means your history is low. So what you need to do is to go and download the history for a specific pair from your MetaTrader. You do that from here, from tools. Okay. Tools, history, and here you can download whatever you want, every other tool. Or you can just start going and pressing the home. Okay, clicking home, and it will start to collect everything, then to apply that from the beginning. That's all. That's what you do to get the best of the statistics. So once you get the days, what you do, okay, is you are looking. Let's say 27. It's today. Okay, every, let's say, top 5 or top 7 days, that's the most powerful days. Of course, according to the numbers as well. That's how many times it appeared, and the percentage of all the times. How, I mean, if it's 4 times, the percentage of that 4 times compared to all the appearances. Okay, so what we are doing is, let's say we got 27, so there is a good chance that on 26 or 28, one day before, one day after, we are going to get a top. In other words, yesterday was 26, there is a very good chance that will be a top. Okay, so that's basically the idea. That gives me the chances, the days for tops, and that gives me the days for lows. And you can see here on 17th we got the low, right here, and it gives me that 17th is the most powerful day. Yeah, my history is bad because this is a new real account we got for the crystal purposes. So that's why my history is still not downloaded here. But basically that's what it tells us. 17 is currently the most powerful day historically, and 17 we got a bottom. That means we are very good after buys, right? Because we are arranged to look for buys here, which means we are looking for lows, the bottoms, right? And here we are looking for the tops, we're looking for sell, and 27 was a good day, so day before, day after, we are ready to go for sell. That's the tools, the main tools we have in the crystal ball. Any questions by far? I don't think that you need to waste your time on understanding, to try to figure out exactly when a high, when a low might be created. That's why we designed the Libra code, the combination of historically statistics and historically chances for specific day or two in a row to be bullish or bearish, and 3 days in a row, of course. Okay, so that's what the crystal is designed on, crystal ball designed on, based on. Now, besides that, we got two more tools here. One, the trading tunnel. This trading tunnel is basically the very simple tunnel of averages compared to highs, compared to lows. We create a tunnel here to have a visual tool when we are above or when we are below a normal zone. And the middle zone, the tunnel zone, is a normal zone. Every time we get seriously above it, it's time to consider full sell. Every time we seriously below it, it's time to consider buys. Now, I want to give you some tip based on it. Okay, if you take a look on the tunnel, what you can do is visually, just visually, mark for yourself is previous, not historical, but previous tops and bottoms created above or below the channel. What do I mean? If we got below the channel right here, okay, it was right from here to here. When we got above the channel, that's from here to here. And then go and scroll back. That's when we got above the channel, that's when we get below. That's when we got below the channel, that was the low. That's once again, because after that it went up again into the channel. Then from here to here, then again to the channel. From here to here. And you will see that when the big moves happen, this is basically the average price. The pair tends to go below the channel, and this is average price, average movement, sorry, not price. It tends to go above the channel when the big moves happen. When the small move happen, you can also mark yourself small move, then you will see like, okay, it's from here to here, from here to here, right? From here to here. And this way you know, okay, so this is my average move down when the small move happens, right? And here as well. So when you go below a channel or above the channel, you have this idea. If the move is going to be small, how far I can go above the channel. If the move is going to be big, okay, how many pips this move could be. Of course, that's not like proven place like, okay, I'm going to sell limit here and I'm going to make a million. No, but you know approximately where to expect it to. And when you got this combination and you reach the statistical top or bottom, and your predictant tells you, okay, you are now in a great place, that's all the things that coming together and really gives you this understanding, wow, I have some power in my hands. I have a very good place to trade with, to look for setups, right? That's the best starting point. Will you get a setup? Would there be really a great trading idea or potential setup to form? No one knows, but this is your best starting point, and this is the most important thing, to prepare your best starting point, right? When you start to build something, let's say you start to build a house. If you don't have the tools, you are on a terrible starting point. But if you get all the tools and you get the wood and you get the beton, right? Cement, how is it in English? This is your best starting point, right? And same with trading. When you're trying to find a setup, first of all, make sure your basics are very, very good. And the basics are exactly these things. Okay? Okay, Murali, hi and welcome. I just finished to explain that, so you will watch the recording, okay? I'm not going to go over that again. Just finished. Just watch the recording. If you have any questions about the statistics or the predictor, you know how to reach me. I'm there. Okay. Also, once again, welcome. So that's what we do, guys. That's extra tip I wanted to share with you because if you check any pair, okay, check any pair you want, euro dollar, for example, okay, and you start to do the same thing, okay, you will figure out, okay, that's from bottom to top after the cross, right? After the cross. Here again, right? The total. You go low and you check again from here it crossed up to here, including the spice, of course. That's the big moves for the sell. Now you do the same for the sell, and you can see you have two averages, few big moves like this and a few short moves like this, and a few very short moves like this. Okay, so that's basically the average of pips you can expect. And if your statistics would match up with these expected moves, you know, boom, you have an amazing starting point, and that's what we really want. Okay, because prices in general are moving in the same amount of points approximately when they go out of the normal zone, and the normal zone is the average zone, which you can see by the trading channel. Okay, so that's a very important tip I wanted to share with you. Now the next important thing, which the other tool we have for the crystal, and that's called action zones. You can call it resistance zones, support zones. It does not matter how you named it. You can call it levels, you can call it whatever you want. It doesn't matter. What it gives us is the levels we are looking to act at. Okay, so that's the levels where we reach them, we know, aha, something is happening, and I better start looking to trade. But before we start to discuss about these actually levels, I want to give you guys some extra tip here, another tip, very, very important. What could happen is, let's say today you get an amazing, or yesterday you get an amazing sell opportunity with all the percentages, just for example. But a day after, you still stuck around the top, and now the percentages are a bit weaker. So let's say today you got a signal, tomorrow you're still stuck around the top, okay, but the percentages of the predictor changed a bit, right? It changes statistically every single day. That's what I said before, right? But if you had that yesterday and you're still on that levels, still waiting for a potential setup, you still can trade it. Okay? Does that make sense? Which means, in other words, you don't really, let's say the euro franc, okay? I got two signals, one yesterday, one today. On the very, yesterday, I got this signal, and that what gave me this chance to look for the sells. Okay, we got the levels, we got 27, and I got a alert yesterday. And this is what I want to work with, as long as my levels are holding. Even if today I don't have the predictor with me any longer. You understand what I'm saying, guys? So if you get it today and tomorrow the predictor is gone, you are still on good day zone, and you are still, if you of course holding these levels, then you of course would be great for trading. Now, talking about these levels, we have what we call action zones. These action zones, what they show us actually, is very simple. They give us the levels, the zones of action. The percent, that's a good question. What the percentages are? That's the calculation we have in the, how to say that? In the background, okay? Calculating the how many times it was actually holding and bouncing, and what the strengths it gives. Again, some mathematical feature, nothing special here. You don't need to pay attention to the percentages. You need to pay attention to the levels. Okay. For us, for me, for my tests, it gave me the mathematical help, like, okay, the reliabilities. Then I know exactly what percentages are doing and so on. No. For you, as for this version of the system, you just need to pay attention to the levels, nothing else. Don't waste your time on that. 100% does not mean that it was never broken. No. I'm not going to enter the mathematical explanation here, but as I said, the levels you got, red, green zone, that's what you need. Okay. Otherwise, I would already explain how exactly to use that. So, what do we do, guys? Once we got the days and we got here the alert, okay? It could be red, like a sell alert, we're scanning for sell opportunities, or bullish alert, which is looking for buys. Okay, once we get that, we know we are in a great starting point. Our next step is drop to 4-hour chart. Now note, we can trade on 4-hour, 1 hour, or even 30 minutes or 15 minutes. It doesn't matter, I don't really care. As long as you go through all the time frames and get the levels from all the time frames. In other words, from daily I up to 4-hour chart, I can see that yesterday, 26, I am next to action zone. It doesn't really have to be exactly inside. It's enough to get close to it, because the market is not always Mr. Perfect. This part I believe you already know. Okay, the market is not always Mr. Perfect. So when it gets closer and it takes us next to the levels, right, we will want to rely on that. So if we get one on the 4-hour chart and you get one on the 1-hour chart as well, you can even drop lower to 30 minutes and 50 minutes, but you will have to make sure you have also these levels and zones on the 4-hour, on the 30 minutes or 15 minutes. All the time frames you will want to go through. Okay, I myself always prefer to find myself on 4-hour and 1-hour chart, simply because the 15 minutes and 30 minutes could have a lot of noise, which is better to avoid when possible. Okay, but again, that's me. If the level is so good, I can still trade the 15 minutes or 30 minutes. No problem with that. But I always prefer the 1-hour and the 4-hour chart setup. From my point of view, that's more than enough. What we do next is we prepare for trading. Now, saying all that, what happens if, let's say, we drop to 4-hour chart, we have the action zone, the green action zone, which means we are looking for sell, but on lower time frame, the 1-hour chart, it's missing. Or alternatively, the 4-hour chart doesn't have it, and 1-hour chart has it. Okay, only one of the time frames we want has it. That means that there is a chance that the setup is not really good, is not really ideal as we want to trade them. And I always prefer to wait in that case. I prefer to get my maximum confirmations when I'm going for a trade. Okay, that's well, as I said, that's the best starting point when you get your maximum confirmations. All right, so that's in terms of the action zones. Now, one thing I want to go back and talk about is the channel. We are looking to trade two ways here, basically, using the crystal ball. The first way is when we go out of the channels. As I explained before, we measure the distances, we know exactly where to expect. When we are out of the channel, we are looking for sells going back in the channel. Where we are out of the channel, we are looking for buys going back in the channel. But there is one more way, and that's trend riding. When you can see that the channel starts to change the slope up, and we go up and we get inside again or very close to it, I know I am good to continue. As long as my slope remains bullish. Okay, so the tunnel basically gives me all the opportunities to try and to ride the trend. All these chances provide me the sell opportunities. See how every time it goes inside, and if I have my statistical and my predictor giving me this chance to go for a sell, I will be looking for this sell, going to ride it again. Okay, that's the two ways we use the channel and the tunnel for. Okay, any questions about that, guys? Thomas, thank you very much, my friend. Yeah, watch the recording, of course. If you have any questions, I'm here for you. Any questions, guys, about the tunnel or anything that we spoke about by far? Okay, wonderful. So we continue. So once I do have all my confirmations. There are two ways to trade. Two ways to trade the setups. Okay, to look for setups. Peter, sometimes the action zone move up or yeah, of course. Action zone is updated according to the price action. Of course, it's changing. What you see today might not be seen in 2 or 3 days because the price action changed and we have the new action zones to follow. Of course. But they hold as long as you are on that levels. They hold. And if they are on the 4 hour and the 1 hour on the same place, so yeah, it could, let's say, get updated from here to here, but that's the same zone of action for us. Okay, the first way to trade is my favorite, and that's trend line breakouts. What we do is we mark the last important trend line, but here comes the but. Why we don't, let's say, we'll mark something like that? Why? Because for trend line, there are a few things you have to pay attention to. One, that the distances between the spots here, here, and here are pretty much equal visually. Again, I don't expect you to start measure the candles or anything like that. No, that's totally not the idea. Okay? But they visually have to be, the distances have to be equal. And you have to connect moves. So if you try to connect something like that, that's not a trend line. For reliable trend line, you need to connect moves, which means higher lows, higher highs. Because you connect a trend line, you actually need to have a trend. And if you try to connect something like that, that's not a trend line. You really need to do a move, a trend, the last available trend. Okay? The next important thing for us, once we get a trend line, we are going to enter right with the break. Right with the break. Protection is slightly above. From my point of view, 2 pips, 3 pips plus spread should be more than enough. You want to give it slightly more chance, 5 pips, but no need to go and make like 30 pips above the resistance. No, that's not the idea. And the target would be at least 1 to 2, which means we are looking to cash out twice bigger. But, and what do I mean by at least 1 to 2? Because take a look, this is our entry. Our really important currently, our really important buy action zone would be right here. So theoretically, we still have all this move to go down to. And if we do not have 1 to 2 risk reward from our entry to the stop loss and to the next available action zone, don't even bother to waste your time on such setup. Simply not worth it. Okay? Very important. Okay, guys? So pay attention to that. The second way I love to enter the trades, that's step trading. It's a bit more complicated, to be honest, because how we define step trading. But basically, what we need for that is 1, 2, 3, and then a break below 2. So 1, 2, 3, and break below 2. I love to go with setups where trend line and step correlate. That's very powerful. Very powerful. Okay? That's the best entry you can get. When a step trading and trend line really go together. So 1, 2, 3, boom, breakout below 2 is our entry. What could happen is that 3 would be bigger and higher, than 1, and we still go with the break of 2. It's still step trading. 1, 2, 3 failed to really hold above 1, and break below 2 gives us the entry. That's the two ways for step trading, for a good step trading. And as I said, I love mostly the setups where they actually go together. Step and trend line. When it happened, sugar trade. Very sweet trade. There was a good question, Peter. Do you like to trade gaps? Gaps do not change nothing of trends. Nothing. In terms of cycles, in terms of waves, in terms of everything, it changed nothing. So don't really pay attention to gaps. The only thing I do recommend is don't trade right after the gap. Let it settle down. Let it create something for you, like a trend line, for example. Okay? I'm not trading right here. Boom. No, that would be not smart. But after it settles down and recreate itself, the next move, it's very smart to trade because trend lines changed nothing. So let's summarize the step, guys, and let's call it as it should be called. Step number 1, get the alert. Alert means statistically proven starting point. You got a good top and you got a good predictors If we are above the tunnel on a average distance as suggested before, we are good to go for a sell, aiming again to get inside the tunnel. If we are riding the tunnel like a trend and we get like we go below, we go inside again, below, inside again, below, inside again, every time we get inside or at least close to that, we are good to look for continuation, as long as the slope and the direction of the tunnel is still with us. Once we get all that, we drop down to 4-hour chart. We are looking for action zones. We can drop to 1-hour chart. If we do so, there has to be action zone as well. We can drop lower, but it has to have action zone as well. For entries, we have trend lines and step trading. The combos of them is the best setup you can get. The risk reward is at least 1 to 2, which means from entry point to stop loss and to the next available action zone, the risk reward has to be at least 1 to 2. Most of the times it would be more, like 1 to 3, 1 to 4, 1 to 5. That's the setups you will want to trade. It's all about the risk reward trading. When do we not trade? When we start with 4-hour chart and we want to go to 1-hour chart, but on one of these time frames, action zone is missing. Let's take, for example, New Zealandian dollar. Here you go. Okay? Doesn't matter how good my predictor and statistics can be, on the 4-hour chart, I do not have action zone. It's only further down. On the 1-hour chart, though, I do have. Is that enough for me to trade? No. Therefore, it doesn't matter how tempting it could be. I will not trade that. Remember, guys, what we are looking to do is to get the best available starting point. That's not a guarantee we are going to end up with a profit. It is a guarantee you have a best starting point, and if you will stick to your setups on the best starting points, respecting the risk rewards, this is exactly where we will want to trade, and that's what will take us further and will allow us to grow. Snorri, that's a wonderful question. Can you trade it down to the 4-hour chart action zone, meaning down to here? The answer is yes. How? Every pullback like this, or further if happens, back to the top action zone for sells, we can look for a sell. As long as we get this correction and we get closer to the channel. If we get closer to the channel, I don't say exactly inside, but even closer is good enough. Okay? We know we can continue down. Yes, the answer is yes. That's a very good question. Okay? Remy, sell to the... Yeah, this is... I just show you an example, Remy, on the last trade I had. Actually, not myself, to be honest. I didn't trade it. My guys did, of my team. So I just show you what they told me. Honestly, saying it as it is, I didn't manage to sell that. They did, and yeah, holding that. By the way, guys, for management, when you are in the trade and you get 1-to-1 risk reward, for example, okay, or slightly more, what you can do is also break even. That's a guarantee you will not end up in a loss anyhow. It has advantages, it has disadvantages. The biggest advantage of it is that you will not fall into this psychological trap when, let's say, you have 1 or 2 losses in a row. Then, you know, the confidence go down and so on. That's just psychological traps of every trader. So you will not fall into that. Okay. Peter, as I said before, these percentages are not for you guys. That's for me, for my tests. For you, just the action zones. You don't need anything else. That's for myself. When we run all the tests, the percentages just give us for future statistics to know where to make the improvements. Nothing else. Just simple mathematics. Okay, so that's the steps we do, guys. That's what we trade. That's what we aim to trade, and also very important, when do we not trade, as I said before. I gave you a few tips of what to do. I just want to go, I showed you this example. There was one more, which I don't remember now, to be honest. What was that? Oh, that was Euro Kiwi. We had, a few days ago, we had a top, like 2 days ago, I think, called a possible top here. On the 4-hour chart, that was the action zone, which now is red because we are above it. It used to be green. And on the 1-hour chart, it was also green. Now it's above, so it changes. But that was the setup, basically. Now it's hard to show it, but that's what the setup here. Would you say this is a good setup, guys? Yes or no? Yes, exactly, of course. The trend line is good, the distances are clear, equal, everything come together, and boom, it still doesn't work. Why do I show you that? Just to prove you guys that even when you have the best of the starting point, it's still not a guarantee it's gonna work. It is a guarantee that you have the best of the starting point. And that's what I want you to remember. Okay? Now, does it mean we stop looking for sales here? No. The next available day, which could be, by the way, 29 in 2 days, for example. Okay? So it could start from tomorrow and Monday as well to continue, right? We might be looking for sales again. Of course, we need to look for the action zone. We are actually next to the action zone on the 4-hour chart. We are next to the action zone on the 1-hour chart. So if we get our trend line rebuilt, unbroken, or step trading, or the combination between trend line and step trading, we will re-enter that and retrade it. And that, the risk reward of that, allows us to do what? Get wrong once, get wrong twice, and when the move happens, still end up in growing side. That's a very serious psychological thing here, because many of the times it's just hard to convince yourself like this move is still, or this zone is still good. Most of us do what? When it fails one, like I'll be looking for something else. And then boom, things happen. We give up and then things happen, right? That's a very, very serious, very well-known, very serious psychological trap. Market always move when we are not around, right? That's the kind of feeling traders have, right? That could happen, guys. I tell you all that because I know how it feels. I went through all that. Just want you to remember, this is game of statistics. And that's what it is. Games of statistics. If you keep doing that right, with the good risk reward, on the right levels, what you get is the ride on the right side, which means you go with the statistics. And you will grow accordingly. Not every single trade, not every single week. It's all about probability. Andre, we say exactly on the same time, I say. It's all about the probabilities and statistics. It is game of risk reward. If you respect that, it will respect you back and will give you the growth you are looking at. There are only two ways account could be managed based on. Like two ways for account management. Slow and grow, or try to make it fast and then blow. That's the only two ways your account can move based on. Okay, so you choose where you want to find yourself here, guys. We started a live account, as I said, for crystal purposes only. Every of my systems, we run a live account, and we have these results shown, entries and exits. It's very, very important. And that's what I will also share for crystal. So you will be able, guys, and my programmers now upload how to say that, technology, taking my trades live and posting them automatically to the page. You will be able to see how I trade the crystal ball. And when I say I, that's not me only, that's me and my team. Okay, I'm saying that from the very beginning. You will see these trades taken, the good ones, the bad ones, everything, of course. And I hope it will be helpful for you to learn as well what's good, what's not to be taken. This page would be on the main page on the crystal ball, but I will let you know, guys, of course, when it's up. It should be shortly, I believe, and that's all. You will be able to start. You'll be able to start and follow that. Now, that's basically all for today. Our first meeting was all about to put it all together, give you guys these extra tips, give you guys this extra do and don'ts. So whenever you find yourself dealing with life and asking yourself, is it good or not, you will remember these words I said today, and you will go through all these steps. Remember, the most important step is always the first step, and that's starting point. If you have a good starting point, that's the place to start and to trade. If you don't have a good starting point, don't even bother to waste your time on finding a setup. Best starting point means you have the advantage of many other traders. You have the right timing to look for the setup. With the trend or with the reversal, we have the two options here. Okay, guys, that's all. If you have any questions, do not hesitate to contact us. We will reply for everything, of course. In a week, we meet again. We go over the setups. If you have ideas, if you have questions, if you want me to cover something specifically, let me know. And next week, I will also give you some more advanced tips to pay attention to. Okay, it will be more advanced. Today it was more basic. Next week will be more advanced, and that's all. So I really hope, guys, you enjoy the crystal ball, this or other way around. And my idea is to, to help you around and to simplify what could be simplified in trading. And that's all. If you have any questions, I'm here for you, friends. Thank you very much for attending. Thank you very much for finding the time. And I will upload a video and we'll let you know, of course, once it's ready. Thank you very much. Bye-bye for now.